Well, welcome back to Insurance Gone Wild. I am your host, one of your hosts. My name is Dennis, and this is
Stephanie.
And we want to talk to everybody each and every week about insurance and some of the crazy stuff that goes on. We want to help our clients and anybody else out there to understand it just a little bit better, a little bit deeper, and talk about hopefully subjects that you've always wondered about.
Because who doesn't sit around just saying, gosh, do I want to know more about insurance? And that is who we're looking to reach.
That's right. Well,
the people who are in the bathroom reading their policy from front to back.
Yeah, because they got a claim. They're trying to figure out why it didn't get paid or why it did get paid. Yeah. And that's whenever they're wanting to know about it, right?
Yeah.
So, hey, I get it. I mean, there's stuff like for me that I do the same thing with. I don't need to know about it until I need to know about it.
That's right.
Then when things don't work out like I want them to work out, I'm not real happy. But anyway, we want to talk about things that we think that you as the consumer would be interested in, because why?
We are consumers too.
We are consumers too.
That's right.
But we also happen to be insurance agents. And just to give you just a quick synopsis, my specialty is really more P&C, property and casualty, which encompasses commercial insurance, all types of commercial insurance, home, auto, things along those lines. I also do life insurance, and Stephanie's I'll let her tell you what her specialty is. Do you know what your specialty is?
I have a lot of specialties.
I'm talking about as relates to insurance.
Oh, sure. I can share those as well.
Okay. All right.
So it's health, life, anything, and then, ancillary products. So your dentals, your employee benefits. We do work with individuals, but specifically, going after the group, the employee. Working with a company to set up that benefits package that you get to elect once every year and go from there. So,
yep. A lot of different moving parts with everything that we do.
If it's insurance, we do it in some capacity.
We do it in some capacity. Which, is a good thing, because when we partnered up, that's what we were looking at doing.
Yeah. You can't specialize in everything. So today's topic, is actually life insurance. Life
insurance. Everybody asks about life insurance. We actually do get a lot of questions about life insurance, but it seems like I think a lot of people don't have life insurance, or even people that I know are like, well, I've got it through work. So that's the big one,
the main objection. So when we bring it up to clients, and quite honestly, we've not been doing as good of a job. We had a little stint where we were doing well, but we were drinking water out of a fire hose at one point, just trying to keep up with everything. And I am a huge believer, first of all, in insurance in general. And then on top of that, life insurance. That is, it's so important. For 99% of people, it can absolutely save the day. And then hopefully you never use it, right? Depending on what products you've chosen and all the things. But so when we bring it up to a client, if they're like, nah, I'm not interested, it's going to be typically 3 objections. Number 1, they think they can't afford it. Oh, it's just so expensive, I can't afford it. Number 2, I have it through work. And then number 3, do you know the third one?
I don't know where you're going with number 3.
Shit,
What's
me
number
neither.
3?
I forgot the third one.
Or just
not right now. Not right now. Not right now. That's statistics show not right now. So we'll go strong with that.
I think the biggest thing that is why is it important? Why is life insurance so important? Why do we care about it so much? Now, yes, we sell it. Yes, we make commission off of it.
Yep.
But it doesn't matter if we make commission off of it or not, because if somebody needs to use it, holy moly, it changes their life.
Yep.
Or it can keep them in the lifestyle in which they become accustomed, or it helps with so many things. So why is it important from your perspective?
So I will say, the company that we both used to work for, they actually did such a fantastic job. This one woman who was training us, one of the things, and I'll never forget it, but she was like, well, if what happens if one of your clients calls and says, oh my gosh, did you offer so-and-so life insurance that just passed away, but you've just been so good to us. Like, I know they have to have a policy because I know you would have said something, right? And you're like, oh my God, I could die. I could die right here. But they're like, so let's say you've got a client or you've got somebody in your life. Would they prefer you to hand them a casserole when you go visit the family members, or a check? And even if that check isn't quote unquote enough, right? Whatever that enough number is. And we can talk about how to kind of do an evaluation. I'll take that check. That's not enough.
Because you buy a casserole
all day over that casserole. Yeah. So what it does when I talk to my clients about it, so we'll do a quick life evaluation. And it's actually called life. So it's, how much do I need? Right? That's a big question. And it's like, well, why is it important? Well, what are you married? Do you have children? What stage of life are you in? What kind of debt do you have? What are you looking to pass on if you're talking legacy? So there are all of these different scenarios and these different questions that feed into why is it important to you? So starting with the L, right? Let's spell life, L-I-F-E. L, liabilities. What debt do you have? So let's use, because we're going to pull up actual rates. Let's use a family. Mom and dad, 32 years old, and then young kids. Let's say 7 and 4. So 32 years old, what liability do you have? Well, do you own a house? That's a liability. Do you own cars that you still owe, money on? Liability. Credit card debt. Student loans, if you still owe those. Any other random loan. What's another liability that you can think of?
Well, those are the big ones.
Those are the big ones, right?
Yeah. Could be medical debt. I mean, you don't own.
Sure. But essentially those are kind of your five hot ones. And then I, income. And remember, so we have a husband and a wife, 32 years old, but this is separate. So yes, you guys are sharing the liability of the house, but we're piece, and you can split that in half if you want to split that in half and say, okay, well, we still owe $300,000 on our house. So husband gets 150, wife gets 150. That's fine. Whatever you want to do. The I is income. How much do you make per year? And how many more years are you planning on working? At 32, I imagine that number is going to be over 30, if not, you know what I mean? Like it's 30 or more. And even if you're just making $60,000 a year and we're not banking on inflation or merit increases or anything else, it's 1.8 million right there. F, final expenses. That is your burial. That's a small number unless you are just going out in style. But that's your burial, your coffin, your plot, your whatever your party is, your celebration of life.
If you do a full funeral, you're talking $20,000-$25,000.
Could be, yeah. But that, that's pretty minor compared to the others. And then E is education. So we've got, in this example, we've got a family of 4. They've got 2 children who are young. Do you want to pay for their education? Are they in private school right now? That could be, I've got a lot of friends who have their kids in private school. And then many who don't. So, and then do you want to pay for their college? That's a big thing. And then that is an ever increasing rate as well. I mean, I think for a 4-year degree now, I don't even know but I have to imagine it's like for a basic crap education, at least $70,000 to $100,000. Even at state school? Oh yeah. So let's say $100,000 a year. No, that would be total.
It depends on what school you go to.
We'll say but you're talking like state school in, state resident
college. Your first 2 years for little to nothing, but
there's still a cost and everything else. Yes. So we'll say $100,000 for education per kid. But anyway, so you go through and we write these numbers. I don't come up with the numbers. I ask the clients, you give me the numbers, because then it's not me telling you.
Their numbers. It's not us dictating anything.
I dictate nothing.
No. We can recommend, but we're not dictating anything. But we're only recommended based off your circumstances and your numbers. Yeah.
So let's just do quick math here. For the liabilities, let's say $300,000 on the thing.
Well, we're at $2 million need right now.
Okay, we'll round. So because $2 million need. You tell that to a 32-year-old and they're like, whoa. I don't want my spouse getting rich off my death. Like, that's insane. Number
Yeah.
one, I can't afford it. Like, number two, that is so much money. You got to be kidding me. Make $60,000 a year. And they're right. Do they necessarily need the $2 million? If they died tomorrow, yes, that would be helpful. Right. Now, there are a lot of factors that go into it, because obviously one of the spouses may not remarry, and then whatever the case is. And then, so we come up with the need. The need right now in this example is $2 million. And then we look at, obviously they're going to be concerned with price right off the bat. Right. But we're going to put a pin in that for a second. So what we then do is have the conversation. How do we package this deal? What does this look like? Typically, for a 32-year-old young family, you need the biggest bang for your buck, right? They're going to be very budget conscious. So we're not talking about these big life insurance plans who can feed into their retirement and different things. And in this example.
Yeah.
So term.
They might be able to deal with those other plans that we'll talk about a little later.
They could. At 60,000 income, though, we're going to say no in today's world, right? I mean, that's just, they can't even afford their homeowners insurance.
unless their debt's really low. But yeah.
Right. So you've got different types of insurance policies, just very, very basic. There's term, there's whole life, and there are index. We'll call them index because there can be universal or variable. Like in a nutshell, those are your three.
Universal life insurance is the generic term for that.
Not even index?
Index is it's an index universal life. It's universal life.
I know, but
and then there's three different types of universal life.
The variable?
Well, you've got the traditional universal life, you've got index, and you've got variable.
Okay, yeah. So it's universal. Perfect.
Yeah.
Thank you. So those are the three basic. Term equals temp, right? That's an easy way to remember
temporary.
that. It's temporary insurance.
It
It has an expiration date. And that expiration date is either your expiration, which you would hate to use it, but you'd love to have it if you passed away prematurely, or it actually expires. And the main terms that you have, and by terms, I mean length of policy, 10, 20, 30 years. You can have some 15, you can have some, get all in the weeds.
You go through AIG, you can get into weird ones like 21 and stuff like that.
But we're going to stay very
10,
basic.
20, 30 years
10, 20, 30.
Correct.
So in this case, again, I would say, our biggest need is we really have to get the kids out of the house. We've got to get the kids. Now, do we want to get them out of the house as in high school, or do we want to get them out of the house as in they've graduated college?
Correct.
That's number one conversation. And if that's the case, remember we've got 7 and 4. So we're talking 11 to 15 years or 18, right? For that 4-year-old coming through.
Because 18 plus 4 is 22, which should get them through college. That's what you're getting at, right?
No.
22 years old,
Yes.
They'd be
From the
4-year-old.
4-year-old. Yes.
So 18, at minimum already, we know that they need to be looking at least an 18-year policy or a 20-year policy.
Right. Which rounds up to, in this case, 20-year policy.
Correct.
Now, at the same time, so we know 20 years, but we also know at that point, okay, well, kids are out, but the spouse is only 52 at that point. Like, you're still working. So now we still have this income that we still want to replace in case something prematurely happens, because we're assuming we're going to stay married this whole time. Right. So then let's say we're going to try to just replace that 10 years of income. So what we can actually do is, I'm going to do a quick little,
Are you going to stack?
I'm absolutely going to stack.
That's what I would suggest.
100%. Because there's no reason. So at 30 today, day one, this family needs $2 million if they're going to be fully insured. And I'll pause for a second and say, here's the thing. If our job as agents, when we're sitting in front of a client, it is to make them better by the time we leave than when we showed up. And even if that's just education for the time being, but especially with life insurance, if this conversation is happening and there's any interest at all, we need to pull the trigger. I have literally had where clients are like, well, I really want to lose like 10 pounds, and then I want to get rated better.
Oh my gosh.
And I just am like totally just trying to because I just want to get my blood work a little bit better. And I'm like, that's amazing. You are one doctor's appointment away from being uninsurable.
That's right.
One doctor's appointment
And
away.
guess what? They're going to pull your medical files and see what your blood work or your weight was.
And all this.
They're going to look at all that.
Well, but hang on. But like, the problem with the waiting that I have personally seen, I have had 4 people within 2 to 3 months after us sitting down and having the conversation. And one of them was about 6 months diagnosed with cancer.
Mm-hmm.
Diagnosed with cancer. And you're like,
And maybe that would have got caught.
It may
early,
have.
Because
it may
there's
have.
blood work many times.
Depending on the policy.
Depending on the
which
policy.
we will not get into the other things. Hang on one. Okay. So you can keep talking while I do this.
Well, if we do get into a situation where they need a paramed, which is blood work, urine, weight,
medical
exam, that's free. It doesn't cost them anything.
Mm-hmm.
They can look at it as a free checkup.
Even if they don't take the policy.
Or maybe something like the cancer pops up. Well, we've had it where people didn't know. That's the only way they would have caught it is because they were looking at life insurance.
Mm-hmm.
And because it was caught early, it was able to do something with it. But anyway, go ahead. You got numbers there for the 32-year-old. Is this the mom or the dad?
This is the dad.
This is the dad.
Which, spoiler alert, men are more expensive than women.
Really?
Yeah. I'll run female here in a second.
I know.
But so for the male,
we do crazy stuff to begin with. So
well, to say understatement is all I can say. But yes. I don't know, but we're the ones that marry you guys. So I don't really know who has the bigger,
Yeah. True.
Different kind of episode. Okay, so 32-year-old male. I did put the second rated, so not the top tier, not standard, but just preferred.
Okay.
So it's the second best.
Sure.
Best
I
premium.
never quote the best.
No.
Hold on just a second.
Sure.
Let's explain what we're talking about because people are like, what do they mean second best?
Sure.
So with life insurance, there's different levels that you're rated. You could be preferred plus, which is what a lot of companies call it. That means everything about you is perfect. They love it. They want to insure you. Here's the best rate. The second one is, well, we like everything about you except maybe one little deal, but we're kind of willing to overlook it. So we're just going to give you preferred.
We still like you, but maybe you do have that extra 10 pounds that we don't love. Yeah.
And then it goes down from there to where you could have diabetes or something, and you get in what's called table rating, where they look at a table and go, oh, we're going to rate you a table B, which means your premium is going to have this much added to it every month. So it looks at your health. It looks at your age. Height and weight, age. It looks at a number of different things. And so what you have to do, you have to do an application and you have to see what they offer you. And I would say that this has been my experience, 90% of them, if one company rates you one way, they're all going to rate you the same way. Unless you come up with something like, we've got a company that's a little more lenient if you have diabetes.
Yeah, so
there's some things like that.
Yeah, so it's like auto insurance where it's like different carriers are easier on kid drivers, on young drivers, and then others don't like sports cars, but some are. So it is the same. So there are some companies and they're like, our sweet spot, we do know how to rate people with diabetes. As long as everything else can look good, then diabetes doesn't scare us as much as the next carrier.
Some people think whatever it is. Cancer, and it's like, well, what kind do you have? Oh, you've got that kind? Like maybe it's some sort of skin cancer.
Yeah.
That's not, and because I had a guy came in, he would go every 6 or 8 months and get stuff cut off his face and his arms and stuff like that.
Are you talking about my dad?
No, he brought in his entire folder, which was like that thick of his medical stuff. I called up old company I used to work for. You know how conservative they were. And they said, okay, well, look through that document, see if you see these 2 words. I went through everyone. Those 2 words are not in here. Yep. Yeah, he'd probably qualify. And he did. Yeah. So just because you have cancer doesn't necessarily mean you can't qualify for insurance. All right. Right. So we explain the different levels that we're talking about. So she's saying I chose the second best.
Second tier, which by the way, really is not difficult to achieve. No. So that's the other thing. People are like, oh my gosh, well, they're only going to give the best reading and blah, blah, the best rating for, 2% of people. No. It's not that hard. $2 million, 30-year term. So this is saying I am paying for $2 million for the whole 30.
Correct.
So if this guy dies at 61, Mrs. Guy
Gets $2 million
gets
check.
$2 million check.
Correct.
$163 a month and 62 cents.
$163 a
Let's
month.
not forget the 62 cents. As of right now,
How
now,
much again?
163.62.
163. Let's say $164 a month. There's no riders, or we'll talk about that later. But no riders.
No, we're
or
just
anything on
keeping it simple. It's straight life insurance. It
Okay.
pays out if you die.
Okay.
That
This is a term policy.
is a term policy.
Which
So this
means
is
10,
30
20,
years.
30 years old.
This is-
It's 10, 20, or 30 years it's going to last, and it's going to
Use it or lose it. Period.
basically.
If it expires, we're keeping it easy, Dennis. Keeping it
okay.
easy.
All right. All right. We're
30
keeping it easy.
years.
There
it
are
expires.
some exceptions, but yes, we're keeping it easy.
Yes.
Okay.
So that is, if you break it down, say 4 weeks in a month, and I understand it's 4.25 and blah, blah, blah. We're doing easy stuff here, Mr. Settlemeyer. That's a casual dinner a week that you sacrifice. That's a case of beer a
Yeah.
week. That's a whatever you do,
That's
$40 a week sacrifice. You have it and your family's protected.
that's
and-
4 or 5 trips, at least 4 or 5 trips to Starbucks, or
That's
something
a
like
carton of eggs a week.
that.
Just kidding. It's not that bad. It's not that
no,
bad.
but it feels like
It feels
right?
like it sometimes, yeah.
You know?
Okay, so now if you go back, what we can end up doing is saying, okay, well, Dennis referenced it earlier. You basically stack and you say, okay, well, the next 20 years is really, like that really is the biggest bulk of what I'm going to need.
Mhm.
And so you say, all right, well, I'm going to do, let's say 1.5.
Yeah, that's probably what 1.5
Right.
million.
1.5 million. We're going to do it for 20 years. Everything else is the same.
Mm-hmm. So we were at 164.
Yep. So now we're going to round up. It says $78.91. We're going to say $79. That's $79 a month.
Let's make
$1.5
it easy.
million.
Let's say $80.
I love that. Even easier.
So we're at little less than half, or 1.5 million, but it's only 20 years.
Only 20 years.
All right. Now I know what she's going to do.
Mhm.
She's going to come back with a $500,000 policy
Mhm.
for 30 years, so that for
Mhm.
the first 20 years you have a $2 million worth of coverage, and the last 10 years you only have a $500,000 worth.
Yeah,
of
kids are
coverage.
out of the house.
You don't need all that money anymore.
Yeah, you're a little shy for the 10 years. Even if you never get a raise, the 60,000 times 10 is 600.
Yeah.
Cut yourself a little short,
So
but
how much
whatever.
is the 500,000 for 30 years?
4709.
So 80 plus 47 is
127.
$130. Why is that less than 2 million?
Because
For
we're not
30?
carrying so
Because
that
we're not
last
carrying
10
the full
years,
2
yeah,
million for 30 years.
that last 10 years, we've reduced by $1.5 million.
right.
And that is that's when your other
you-
things can pop up.
That's right.
But you have to, what are we trying to accomplish? Again, this isn't your legacy. This is I still have a family. I need to make sure that
Yep.
my wife's not going to lose the house. My husband's not going to lose the house. My kids aren't going to be on the streets. My kids don't have to change schools. We don't have to disrupt. There's already a disruption. Somebody has died.
All right, Stephanie.
Yep.
I hear you. The $140.
Okay.
That's or whatever it was. $130.
$130
is $35 less a
Mhm.
month.
Yep.
I still really can't afford $130 a month. And maybe we realize they really can't afford $130 a month.
Yeah.
So what does that look like? What do we do at that point?
At that point, they're thinking.
Mm-hmm.
You literally, when you're sitting in front of these people, they are thinking, and whether it's on the phone or anything else, again, like we talked about before, you can just hear, you can feel the eyes rolling back, but they're like, okay, this is they understand the importance of it. So now it's
correct.
Okay, well, what if, and here's the thing, we don't force the $2 million coverage.
No, it's just showing them what their need was with their numbers.
And remember, we are trying to cover both. And we'll get to this in a second, even if mom doesn't work.
Mm-hmm.
There are other jobs that she's doing that will cost something.
Oh, of course.
And she has valuable financial value with this. So we're not talking 130 times one for both to be like, they're like, okay, well, I can, so they'll have the conversation and it's like, okay, We can do 50. We can do 50 a month. What does that look like?
Okay.
Fantastic. Now let's work backwards. And that's what we do. And at that point, we can start with just the 20. Let's start with just a 20-year policy. Let's see how much we can get for, Mr. Man, and then for the missus that cover both of them, to where it's okay. If mom, something happens to mom, we're going to have this money. And then, because again, if stay-at-home mom, I had one client, they had 4 kids. They were so young. I mean, they were so young, and they had 4 young children, babies having babies, but they were lovely people, and she didn't work, and he was working 2 or 3 jobs just to keep them afloat. And I was like, okay, well, what about your wife? And he's like, she doesn't do anything. And I'm like, oh, okay, awesome. So who does the dishes? Well, my wife does. Okay. And then who prepares the meals? Well, she does. And then who takes the kids to various things, and then
the doctor's office.
And he was like, yeah, well, she does, but whatever. And I was like, and who does the laundry? He's like, oh, I don't want to do the laundry. Let's get her a policy. So it was literally, he did not want to do the laundry. He's like, I can't. Nah, I'm not doing that.
I'll be frank with you. He didn't want to do the rest either, because he needed to work.
He had to. He wouldn't even be there, and that's okay. That's not a shot at him. It's just
no.
But so
it's, they just don't think about that.
Yeah, it's just different. So it's like somebody's going to have to do something. There's a nanny expense now, or whatever the case
sometimes
is.
guys, we just get up and go, wow. I think I sent
the
you a
house
video.
is clean. Yeah.
I sent you a video where the guy's like, yeah, you just put the pizza boxes here, and in the morning
they're gone.
His wife's rolling her eyes. You know, look, you throw the laundry here, and the next morning it shows up folded in your
drawer. Yeah.
And guys don't think about that kind of stuff, because that's not the way that most are wired, you know, because the wife doesn't have a job. Well, the wife does have a job. She got the hardest job in the world. She's a stay-at-home mom. I promise you that.
Yep.
The next one might be a checker, having been a retail manager in the past, standing there at a grocery store and checking.
Oh, the second hardest. Yeah.
Oh my gosh, that's got to be the hardest job in the world. Listen to everybody's problems.
That's funny.
Then the guys like me coming through making stupid jokes, and it's just.
So I was at QT the other day, which, by the way, if you know anyone who works there, if you want to be a sponsor, but little shout out for the QT.
That's right, QT.
I thought I was hilarious just on the checker thing. We'll go back to the life insurance, but I was kind of in a hurry, and I felt like I was kind of being in a hurry, and I was like, oh no, you gotta, it's nice to be nice. And I could see the lady just didn't seem like she was having a great day. So she's going, all I got was a coffee. I just got a coffee. And so I put it on, and she's like, that, it's 209. And I put my card in, and she starts walking away. I was like, oh, I'm sorry. Can I get a bag for that? She looked at me like she wanted to kill me. I was like, sorry. Sometimes I think I'm funny. Have a great day. Anyway, and then I was out, but like, can I get a bag for that?
I know what she's saying like, under her breath.
Yeah. Well, let's say it's not my normal QT. So
yeah,
she'll learn. Right, she'll learn.
Right. She didn't know anyway. All right.
Yeah, it's fine. So anyway.
No, the life insurance stuff. So what you run into sometimes is you explain it all. They get it. Yeah, I need it, but I ain't willing to pay for it. They're not even willing to look at it. I had years ago, I met with a husband and wife with 2 young kids, about size a year or 2.
Okay.
And their premium was going to be $80 a month
for both.
No, we were just his.
Okay.
We did talk about the wife, but just his was $80 a month, and it was like for $1 million or something. And I don't remember exactly what the number was, but it was for quite a bit. And man, I talked about the kids. I talked about the wife. What would happen if you passed away, and now the wife's got to move the kids away from their school, away from their friends, maybe move back closer to her family, wherever that is, even if it's in the area, Dallas, Fort Worth, she's got to move.
It's a big area.
It's a big area. It's quite a disturbance to the kids, and it's disturbance to the wife too, because now she doesn't know what she's going to be doing, how she's going to make it, because she's a stay-at-home mom, things like that. Here's what I ran into. He goes, well, I can't really afford it. Like, okay.
Woo, that
here's the
means
deal.
you can't not afford it.
There's that. If you can't afford
You can't afford $80 a month. You cannot afford to not have life insurance.
That is absolutely correct. That was one of the things I was going to say. If you can't afford it, then let's come up with a different number you can afford, because something's better than nothing right now, right?
Correct.
But because that's why I was asking you the question, what they said, okay, well, this guy, we had already sat and BS'd for a little bit. He loved to play golf.
Okay.
The green fees were $72 every time he played. I said, all you need to do is quit playing golf once a month.
Wasn't willing to do it, huh?
He was not willing to do it. And I walked out of there going, I feel sorry for that family.
Yeah.
If you're not willing to sacrifice $80 a month.
One round of golf.
And it wasn't that they couldn't afford it. That's the difference. That's why I ask you, look, they really can't afford it. Then what do you do? Well, this guy really, they could afford it. Now, I have run into people, they literally can't afford what they need. So it's like, okay, let's get you something, even if it's for $25 a month, whatever the magic number is, let's get you something right now. Let's add to it later. But what you said, you're one hospital visit, one doctor's visit away from being uninsurable. Mm-hmm. And it doesn't matter how old you are, whether you're a kid or whether you're an adult, whether you're 2 weeks old or you're 80 years old, you are one trip to the doctor away from being uninsurable.
Right.
And so another thing that I will talk to, I actually used this with a prospect the other day, and they were asking me some questions about life insurance, and they were, they were just kind of asking. I said, well, let me ask you this, Mr. So-and-so. If you had a machine and all it did was print $100 bills, would you want to insure that in case that machine broke? Oh, absolutely, I would. I'm like, well, to your family, you're that machine. And he didn't know what to say to that. To your family, you're that machine. And then sometimes you hear well, I've got it through work. No, you don't. I've got somebody else I talked to. I had somebody else I talked to 2 weeks ago that said that they're in their 50s. And it's like, well, I've had my insurance through work. I'm like, no, you didn't. You had a benefit, which they did not have to renew every year.
Right.
You have a benefit. You do not have a policy. You're 56 years old now, and you're just realizing that because nobody ever told you you don't own a policy. The good thing about owning your own policy is you can take it anywhere you want to go. Right. Anywhere you want to go, it's yours. They cannot take it from you unless you quit paying for it. Right?
Sure. Yep. Or
it expires. And it's a shame that people are not educated on life insurance like they need to be. And lots of times you don't necessarily need some big, huge policy. You just need something. But the life acronym that you use, there's another one called DIME, does the same thing.
Same concept.
Income, medical, educate. It just, it's the same thing. It will show you what your true need is. And sometimes you can afford the true need and sometimes you can't. But you can afford something. I promise you can afford something. And it doesn't have anything to do with the commission that I make off of it, because that's not where I make money. I I make money. You make money off of it, but that's not our bread and butter. So I don't care about the commission. That's what I'm getting at.
We're not, again, just like anything, we're not here.
Because some people think that. Well, you're just trying to sell me a big policy. You're going to make a lot of money off of it. I am, but I don't care if you get this policy or you get this one. This is what somewhere in between these two you need.
My job is to leave you better off. And whether that is just peace of mind, because there are some people and they're like, well, I have this other policy and I don't know, and blah, blah, blah. And great. Well, let's go over, let's do the assessment. Let's see what you need. Let's do all the things. And then let me review that policy. Because some people are like, oh, I'll just cancel what I have and I'll just go with you.
No. Not necessarily.
Just because you have one before me.
Agents out there will tell them to do that.
Oh, there are agents who have people switch their policies every 5 years because there is where you get paid on life insurance from an agent standpoint. First year. That is a huge chunk first year.
And so that's actually illegal. That's called.
It is, but.
I forgot what it's called, but it's illegal to do that.
It is, but that doesn't mean it doesn't happen.
Oh, no, I agree.
The other thing, you want to. every insurance carrier is different. And then you think about like specialties. You've got your home and auto companies, I don't want to but home and auto company, they will sell life insurance. But I'm going to tell you 9 times out of 10,
Progressive Life,
they will be more expensive than if you just go to somebody who deals with true life and when that is your bread and butter. So because now here's the thing though.
Quote is one of them. Okay. They at Select Quote. Let me interrupt you a second.
That's basically us though.
No. Select Quote is a website.
I know it's a website that has all kinds of different companies.
But here's the
which
thing.
Is what I'm
do
saying.
they
It's basically
advertise?
Panatella.
A 45-year-old man got $500,000 for $12 a month. No, he didn't. Not in Texas. I don't know what state that was in.
Right.
It's bogus. It's bogus stuff. I think the problem that I have with those types of whether it's whatever company it is that you go online or an 800 number only, not necessarily an agent, but an 800 number online only, is you will end up screwing your family many times because you don't understand all the ins and outs of what's going on. There could be
so you're trying to do something and then
there could be add-ons that you didn't know about that you could have gotten for little to nothing, or maybe they offered it. You didn't know what it meant because nobody explained it to you.
Right.
Like waiver of premium, or accelerated benefit riders, which we're not going to get into all that right now, but it could be that you needed those and your family wishes you had those, or even a long-term care aspect to it, where you can use some of that face value of the money to help you if you need to go into long-term care, but you didn't get it because maybe it was an extra $5 a month. You didn't know what it was. So you just passed on it. Same thing happens on auto insurance. People that go and go online and get their auto insurance or call it 800 number versus using an agent, usually have really poor policies.
And that's the thing. Again, like not to promote ourselves, but let's not lie. That's part of what we're doing here.
Well, yeah, but at least promote a good agent. It doesn't matter who it is. A good agent,
right. And as we've said before, we'll say again, whether we said before on recording, nobody knows, but for this policy, you as the client don't pay the broker. You don't pay us. You don't pay Panatella. You pay the insurance company. The insurance company then pays us. Our job is to help you navigate through what do we need? How can we solve a problem, whether it's a piece of the puzzle problem or we can put the whole puzzle together. But that's also going to change because what if down the road, this family who's making $60,000 each, the wife gets a promotion. Now she's an executive in 5-7 years, and now she's making $150,000. Well, guess what? Our needs have just changed. They're changed. Now we're also 5-7 years down the road, but what does this look like? What is our house bigger? Is this? So it's constantly assessing as well and having the relationship with the agent to say, hey, great news, but we should hopefully know that this is happening as well because we've been staying in touch with you. So
true. And in that case, maybe it is appropriate to rewrite the entire policy rather than just add on money. It just depends.
Maybe.
It just depends, right?
It depends because you do get into different price breaks and things when you get larger amounts.
Sure. But just to rewrite it because you make more money vomit. You cannot do that.
No.
And that happens.
So that is basically term. And again, and I'm going to give just a couple examples for the people who are not 32 and are like, wow, it's a 32-year-old. I'm way older than that.
Do 45.
Yeah. I'm going to do you want me to do $1 million or half a million?
I do $1 million. I mean, half we know is going to be less expensive.
This is all male and all that second tier. So it's preferred, not the top. And I'm going to go 20 years. You want 20 or 30? Well, we're going to go 20. We're going to go 20. That's
sort of the average is 20.
Sorry, I'm trying to look at my zeros. It's not easy. Mama needs glasses. Okay. 131, 45-year-old, $1 million, non-smoker, $132 a month, $131.80.
That's not bad.
For male. And then just for fun.
Yeah, the female.
$99. Huge difference.
I figured it was in the 90s.
Yep. $99
Yeah, it was in the 90s.
for the female, 45-year-old.
Now, if you throw smoking or nicotine use, not smoking, nicotine use.
Yeah.
on top of that, for the male, you're probably closer to 200.
So we'll wrap up a little bit.
So-
We'll talk about final expense on another one. That's what we'll do.
Okay,
We talked
well,
about term today. We'll talk about some other ones later, so we don't have to rush it.
Well, let's just at least mention them. Whole life,
Well,
last your entire life up to 100 years old.
over that, I think, depending on the policy, it doesn't matter.
Well,
But
it doesn't
again,
matter, at least to 100 years old.
right. Good.
And that'll last your entire life. It's more expensive, but it never goes away as long as you're paying your premium. And there's some bells and whistles about it that are really cool. Then we have the universal life,
Mhm.
which is like a mixture of term and whole together,
Mhm.
that
You can
kind
borrow
of
from.
acts like
and
you can borrow from it. You can use it to pay you at retirement, tax free. I mean, there's a lot of different things you can do with that. Universal life. There's different types of universal life that we can talk about another time. But the idea is that at the very, very, very least, get a minimum, at least a term policy. I mean, just to give you something, even if it's a 10-year term, just get something.
Especially if you have young children,
If you have kids.
if you've got kids that are still under your roof,
Mm-hmm.
please take a look at it. Call anybody that you trust, any agent of some kind. If you need to call us, 817-793 753-0093.
Correct. 753-0093.
But call somebody. Just
yeah.
get the quote, go through the process. Even if you don't take the policy because something pops up and you're like, whatever, it doesn't cost you anything. And then
something else we can talk about. You mentioned kids. Why get insurance on kids? You know,
that'll
we
be
don't have to
another.
answer
Yeah,
that.
no, for sure.
That. I'm single. Why do I need life insurance if I'm single? I don't have a husband or a spouse or children.
Right.
Well, there's reasons why you need it.
Right.
Life insurance for that too.
Yep. So we'll talk about just different scenarios like that and why it could pertain to you. We have a lot of clients that do it specifically to gift it to charities.
Correct. It's the giving aspect of it.
Yeah. So that's huge for we've got people who use the term life to offset the taxes that their family is going to incur based on the estate taxes.
You leave the money to your cat. You can leave the money for your cat
in a trust,
but you can't leave it to your cat.
Yeah.
You leave it for your cat.
Yeah.
You can do $10 million for that cat if you want.
Meow, meow, baby.
Yeah.
By the way, can I be somebody's cat who wants to leave 10 million? I'll curl up in your lap. No problem.
Yeah, that's a whole nother story.
It is. It's a different podcast.
Anyway, life insurance is a huge, huge subject.
There's a lot. We simplify it. And the other thing I'm going to say
is very much simplifying
is the last thing, when you get that policy, I have the policy sent to me, the agent, because then I will deliver it. And on that packet, we don't write life insurance policy. We write what that is for. That is mortgage. That is Susie and John's college
fund, whatever.
This is not life insurance. This is why did you get it? You didn't get it so you could write a check to somebody.
No.
You got it for certain reasons.
Correct.
Remember that because it's sometimes the first thing to go when stuff gets tight.
Correct.
Because it's a promise. You are paying this money every month for a promise. And it's a promise you're never going to be around to fight for. So if you have an auto policy and my auto insurance is supposed to repair my car, but they're not doing it. Well, I'm here and I'm going to give them hell. You're not going to be here to give the company hell. You are literally paying for the promise.
And I have had that happen. I've had that where a guy, we wrote him a policy, and he died, and we needed to argue with the insurance company about some stuff that supposedly he didn't tell him it was in his medical stuff. And
was it within the 2 years?
It was under 2 years. It was less than a year. And I'm like, well, you guys pulled all his medical records. What's the deal? You did
your due diligence.
Well, we had to go, if they had asked those questions at the beginning with him, we could have, headed that off. Part of that's their fault, the insurance company's fault. But the other part is, I think he knew something because he came out of nowhere and asked me for this. And I've been talking with him for 6 or 8 months. If I told you who it was, you know who it is. It's somebody that we tried to work with early on in a commercial deal. But yeah, you're right. You're not there to fight for
You're
it.
not there.
You're not there to fight for it.
So you have to keep in mind just what it is that what you purchased
Yeah.
and why. And the life insurance, more than anything else, there's no law. You don't have to have it. Your mortgage company doesn't make you have it. You're doing it because you're trying to protect somebody else. This is the policy that is for everyone but you.
Yep.
Anyone but you.
Yeah.
It is the selfless insurance policy.
I've had people tell me I didn't know how much my dad loved me until I found he had a life insurance policy.
Mom.
Little things like that.
That is sad on, I have to tell you, so many levels.
Well,
I have to tell you.
no,
but that's fantastic. I get it.
They were a good family. This particular one that I'm thinking of, that wasn't it. It was just that the life insurance, they didn't realize how much the life insurance
had an
huge effect on them.
Huge. It is life-changing.
So, yeah.
And sometimes life-changing in the fact that it doesn't have to change people's lives.
That's it.
Other than just the loss of the loved one.
And there's other reasons to get it. I mean, sometimes if you have an SBA loan, they make you get a life insurance policy to guarantee the loan in case something happens to you. There's other business reasons that
but that's separate.
Yeah, it's
that's
a whole different.
Completely.
But there are sometimes you have to get a life insurance policy, but usually that's more for business reasons. But you're right. Nobody tells you have to get it for your family.
Right. So,
and I think that's part of the problem that we have with life insurance. Well, I don't have to have it, therefore I'm not going to get it. It's like
it's an added expense.
It's like workers' comp in Texas. Texas says I don't have to have workers' comp, so I'm not going to buy it. Well, there's a cost to not getting it.
Right. There's always a cost.
There's
right?
always a cost. So anyway, all right. So we are Stephanie.
Insurance Gone Wild.
She is Stephanie. I am Dennis, and this is Insurance Gone Wild. We are going to be having a website called IGWpodcast.com, IGWpodcast.com. And we will have an email address set up here. If it's not, by the time we get this aired, it will be contact@IGWpodcast.com, where we would love to hear from you. Any questions you have on insurance? What does this mean? What does that mean? Hey, can you explain this a little bit? Can we talk about that a little bit?
And any wild story
or any wild stories that
whether
you have.
or in this case, it's a life insurance episode. So if you've had an experience, where somebody has passed and either there was no life insurance check or there was. So we would love to hear that. I mean, we're in this business for a reason, and there's, yes, we love insurance and we nerd out and geek out on that stuff. But at the same time, we really do enjoy helping people. So to hear any story is just, it helps us as well as agents. Yeah. It betters us. So we would appreciate that. And then we appreciate you guys joining us today. Thanks so much.
Thank you.